In this video, I'm going to talk about the bank reconciliation statement. So the bank reconciliation statement is a statement that is used to reconcile the balance that is on the cash book with the balance that is shown in the bank statement. So it's just a statement that is used to balance the balance that is found on the cash book and the balance that is found on the bank statement. So when you're writing up or when you're drawing up this bank reconciliation statement, you must consider that this business was conducting the transactions using the checks, or this business was conducting the transactions using a current account. So you discover that as this business does its cash transactions using the bank, it will be recording those transactions in the cash book. And also the bank where this business holds the current account, that bank will be recording the transactions, and those transactions will be recorded on the bank statement. So it is assumed that when this cash book is prepared and when this bank statement is prepared, these two documents, they must show two balances that are supposed to be equal. This is because the transactions are recorded in both sides of the document. But in most cases, that's not the case. You discover that the balance that is shown on the cash book with the balance that is shown on the bank statement most of the times won't be equal, and this can be due to several circumstances. Some circumstances that can cause the balances to differ can be because you had recorded a transaction in the cash book. You had recorded a transaction in the cash book, and that transaction was not recorded in the bank statement. So the balance on the cash book, and the balance on the bank statement won't balance. So when drawing this cash book, we know that anything that is received is recorded on the debit side of the cash book, and anything that is paid out is recorded on the credit side of the cash book. And when drawing up the bank statement, the concept is opposite. So the things that you deposit, the things that you debit, the things that you debit are the things that are withdrawn from the account or from the account of the business, and the things that are deposited are the things that are credited to the account of the business. So for example, if the business had received a check from Musa with 50 kwacha, so in the cash book we record 50 kwacha, and in the details we're going to write Musa, and the amount that will be recorded is 50 kwacha on the debit side. But in the bank statement, that amount will be shown on the debit side. Will be shown on the credit side. Sorry, not on the debit side. Will be shown on the credit side, which includes the deposits side. So the debit side of the cash book and the debit side of the bank statement are opposite. The debit side of the bank statement can be found on the credit side of the bank statement. And an example of that can be found on the credit side and on the withdrawals. This way we paid a creditor. For example, if a business pays a creditor, for example, an amount of 130 kwacha, this means that in the cash book it's supposed to be credited, and in the bank statement it's supposed to be debited, which will be included on the withdrawals column. So when these two documents are prepared, as I have said, most of the times they won't balance because there are some figures that you record on the cash book, they won't be recorded in the bank statement. And some figures that can be recorded in the bank statement, we have the direct debit, the standing orders, and the dishonored checks. So what is a dishonored check? A dishonored check is a check which a customer of the bank had to deposit into his bank, but it wasn't credited to his account because the customer of the bank where he was supposed to get the money from his customer had either insufficient funds or the weights in figures and the weights in figures and the weights in figures and the figures in the weights in figures and the figures in numbers were different, or a bank was a steel bank, or a check was a steel check where it was issued more than a period of 6 months. So these are some of so this is the definition of the dishonored check. And the other thing that I've said that can lead the cash book and the bank statement not to balance is the standing orders. So a standing order is just a fixed amount of money that is supposed to be paid to a particular party for a specific period of time.